And here we go. Hey, everyone. Welcome to the Apptrepreneur Show. This is a podcast for apps, pop culture, and life in between. I am your host, Kevin, the Apptrepreneur. Thank you so much for joining me here today. And it has been quite a while since we have done a podcast, an episode of the Apptrepreneur Show. Usually I do have a guest with me today. However, we are kind of doing it solo today. Now granted, I have been doing some morning brief live streams. That is definitely something I will continue to do. But I would like to at some point, and maybe this is the start of it, maybe it's not, who knows, I would like to get back to doing the Apptrepreneur Show as a weekly Friday thing. And I see Rideshare Lisa is in the house. Thank you so much for joining us today. So we are hopefully going to get back to doing this on a more regular basis. We're going to start a little small today, just a couple topics, and really they're going to be related. So spoiler alert, if you are not a fan of the stock market, today's episode might possibly not be for you. However, even if it's not for you, maybe you just like me and maybe you just want to hang, we might do a little bit of a Q&A afterwards. Who knows? I see Repair Your PC is also here. Welcome. I'm so glad that you have joined us as well. But anyway, without further ado, let's get started on this topic. Now, you know that I talked a couple days ago about Robinhood going public. That Robinhood was, after delaying it, after putting it off, after going through and settling a few lawsuits, Robinhood was deciding that they were finally going to have their big IPO yesterday. And I wanted to comment on it yesterday, but I found out that I had a lot more things to say about it than I had initially thought about it. And I figured a podcast format might be a better way to talk about it. So anyway, I had a little bit of a conflicting feelings about Robinhood going public, not them going public themselves, but whether or not I was actually going to partake in the IPO. Now, at the end of the day, I decided not to partake in the Robinhood IPO. I felt that Robinhood is a crazy enough idea to work in the long run. I think long term, the stock potentially could be very valuable. I'm not poo-pooing it because I think it has no future. On the contrary, I think it has a very bright future. That's not an official endorsement to buy it, by the way. Always talk to a financial advisor before you buy any stocks if you do not know what you're doing, and never spend more money than you are willing to lose. That's the best advice I can give you. But I did have some questions about whether or not it would be good to get into the IPO game, because we've seen some pretty big companies, Airbnb, DoorDash, notoriously Coinbase, go public. And on day ones, their stocks shoot well above the asking price. But then because of, well, ironically, apps like Robinhood, people who got at the IPO price and saw the stock rise like 40% higher than what they paid for it, or 30%, something crazy like that, they sell it right away, and then the stock tanks. And I figured that was going to happen with Robinhood. So I elected to wait and sit this one out. I do know a friend who I do not believe is actually going to be investing in Robinhood, except for the meme sake. But he decided that for some previous companies that he was going to buy the stocks on margin. Like, he was waiting for these companies to go IPO for a long time, and he bought a bunch of stocks on margin. And look, that's definitely his prerogative. He has every right to do that. And I'm not going to say who it is. I'm not going to say what the stocks are, but the stocks that I do know that he bought basically have lost a lot of money. Usually when it comes to IPOs, waiting a year seems to work. Not all the time. I bought an IPO in U. That's the ticker. I think it was, I actually forgot what the company was called, but they do like the airport scanning thing. And the IPO was like $38 a share. And now today it's at $51. So, sometimes these things do work out. However, Robinhood did not work out. In fact, Robinhood could arguably be a bomb. In fact, it is a bomb, and we'll discuss why. So Robinhood opened at $38 a share. That's what it listed as. And, that seemed fair, for something that was basically untested and unproven, something that's a little bit of a gamble. That's a fair price. I think this is actually below what the company should be worth, but it has room to grow. And that's kind of what you want. The last thing you want is you want to post a stock at a super high price, like Premier at a high price, and then have it drastically tank and never recover, because realistically that was either as high as it was ever going to get, or it was never worth that much anyway. Some recent stocks that we have discussed on this channel that fell into that trap. Lyft famously debuted at $78 a share, which was much higher than I thought was going to go. And it did get up to 82 that first day, but it flat went right down, and now it's somewhere in the 50s. People who bought Lyft at IPO never got their money back. And assuming they're still holding it, they're still waiting for that to turn a profit. Uber was another one that premiered at $40 a share, something like that, and went straight down. Now, Uber has been above the $40 range. Some people got lucky, and it got all the way up to 66. It is, however, not doing very well now, and there's a reason for that. And actually, that will be our second topic, and we'll talk about that a little later. But Robinhood, I felt $38, yeah, that was good. That was fair. It was, I think, undervalued, personally, and it has room to grow. However, that it didn't really pop. In fact, it dropped. When it went live, a few minutes later, let's see, it goes live at 9 a.m. or 9:10, and then 20 minutes later, it was down to 34.42. Now, it did bounce a little bit, probably because a lot of people bought at that price, but then it dipped again because, ironically, I think what was happening were Robinhood users were buying the stock and pumping and dumping it. That's what I think happened anyway. I can't prove that, of course, but either way, as you can see, it got as low as $33.73. Now, today, it's doing a little better. It's eking up there. And in fact, it got to $36.79, which is great. I mean, compared to yesterday, it is up a little bit. But right now, it's hovering at $35.99. In fact, let's go to the one-day thing. Yeah, $35.95. It's up $1.13, but again, it's down about $2 a share since yesterday. Now then, what does this mean? Is that really, really bad? Well, here's the thing. Let me put it this way. In most areas, I would say that is not too terrible. It is not unusual for IPO prices to go down a little bit after going live. And sometimes it takes IPO prices like a year before they actually become profitable. I've shared this story before on this channel, but it's worth repeating just to show how big fortunes can turn around. When Facebook premiered, it premiered at $40 a share. And within 90 days, it was down to like $26. Basically, people who had emptied their bank accounts to buy Facebook stock were holding on to losses on paper. But if they held that stock, it's worth a heck of a lot more now. In fact, it's worth hundreds of dollars a share now. So I think that this is this is not terrible from my perspective. I think that, it's fair. Robinhood is, again, a newly tested business. And here's the thing. Robinhood has a lot of places they can go. They started out just as a fee-free trading app, but then they had a gold feature, which costs like $5, I think. And where you can pay $5 and you can start buying stocks on margins and things like that. And then, of course, on those margins, they charge interest. They also have higher tier programs. I think one of their services is $2,000 for the day traders. And they can start doing a lot of things. Like the free version, maybe they limit it to a few transactions a day. And you have to pay to have unlimited trades. That's one way they could make money. Maybe they can get into the banking arena. I mean, they've already got access to people's bank accounts. Maybe they can say, hey, do you want to open a business checking account with us? You can do that. What if they decide to offer a Robinhood credit card? Like, that would be another thing they could do. There is a lot of potential growth for Robinhood. So, I think that this price for the stock is actually fair considering what the company is worth or what they're doing right now. But, they're not doing enough to make it like a breakout hit as far as I'm concerned. So this did not surprise me that much. Now, that said, others do not agree. In fact, officially, Robinhood has had the worst debut ever for an IPO of its size. So let's look at this article from Yahoo Finance, written by Drew Singer, and find out what that means. So, and apparently this comes from Bloomberg, but Yahoo Finance is, of course, sharing it. Robinhood Markets Incorporated wanted to make history with its initial public offering, and now it has for the wrong reason. Shares in the broker behind the meme stock revolution fell 8.4% below the IPO price in the company's first trading session. That's the worst debut on record among 51 U.S. firms that raised as much cash as Robinhood or more, according to data compiled by Bloomberg. It dethroned the 2007 IPO by another brokerage, MF Global Holdings Limited, as the worst debut among qualifying firms. MF Global ended its first day down 8.2%. So, Robinhood opened at the $38 initial public offering price. For an IPO of Robinhood's size and larger, that's the weakest opening trade since Uber. Uber. In May of 2019, among U.S. firms, Uber finished its debut session down 7.6%. So, second only to Uber. Second only to Uber. That's amazing. So, yeah, that's pretty bad. But again, do I think this is the worst stock? No. There's other stocks you can buy that are significantly worse. And by the way, I do want to share this because some people, I am logged into my personal Robinhood account, and as you can see, I have no holdings in the company, so my opinions are, well, they're always my own if we're being perfectly honest, but now they are especially my own because I currently have no stake in it. Now, if Robinhood gets below $25 within the next few months, I will probably buy some, to be perfectly honest. I still intend to buy Robinhood at some point in time. However, that being said, I will not be buying it right now. I think that it's definitely, I think one of the issues is that I think a lot of Robinhood traders did buy it and they basically bought it to flip it. I think they bought it to flip it. I think Robinhood's little limitation, like, well, if you buy stocks for an IPO and you sell it within 60 days, you will be, or if you flip it, you will be banned from participating in another IPO for so many months. I don't think that was that much of a detriment to people doing this. So I think that some people did make money, but I think it's going to take Robinhood just a little while before they end up hitting the big time, so to speak. But anyway, that's the first topic. So I would like to know what all of your thoughts are on that. You can comment below, like, favorite, share, subscribe, and as always, flame responsibly. And with that said, let's move on to our second and final main topic today. And I kind of alluded earlier to what it might be about, and what it is about is Uber, particularly Uber stock. Now, Uber stock, I've had a complicated history with Uber stock in the sense that I remember when Uber went public. And look, I was up front for a long time when this was still a gig economy channel. when all I did day and night was complain about Uber. Uber sucks this, Uber sucks that, Uber can suck my you know what. I did that every single day, sometimes multiple times a day. But I was very honest early on that when these gig companies started going public, I would be buying stock from them. And I wouldn't be buying a lot of stock. In fact, I was very specific about how much stock in these companies I would be buying. I would be buying one share of each company. Now, why would I do that? Well, it was kind of like a little vanity thing for me. You know, Uber made me a success. Uber made my channel a success. Uber, you know, was an unwitting partner in my rise, and it turns out now fall on YouTube. And as a result, I wanted to own a piece of that. And I also just thought it was like funny because if people said like, you know, you're paid by Uber to do this. I don't know why Uber would pay me to talk smack about their company. I mean, look, yes, Uber did reach out to UberTubers. I mean, this is not exactly a secret. Many of them showed up in Uber's commercials. I won't name names, but once they did that, then, you know, their credibility in the UberTuber community was pretty shot. And again, they're lovely people. And hey, if I was in that position and Uber was offering me cash or whatever it was, I would probably make those commercials too. But, you know, it's a very, very fine line to walk. You can't be working with the company you have been tasked with competing with. So it's just a very fine line. And I found out that my line was even thinner because I was, you know, for lack of a better term, the CNN of Uber. I was the CNN of the gig economy. I used to be, when I was at the top of my game, I sound like such an old man now. When I was at the top of my game, you would see multiple videos from me whenever there was a news item for Uber, Lyft, or Postmates, or DoorDash. It didn't matter which one. It was primarily Uber because Uber was the gift that kept on giving. Well, I would be making a video. And I would make several videos a day. So I definitely was kind of, if you wanted the news of the gig economy, you would come to me. And I remember the day that I announced that I had bought an Uber and Lyft stock. I waited a few days. I waited for it to go down. I knew it was going to go down. But I bought a share of stock each, and I announced it. I even called it like I am now an investor in Uber and Lyft. And in the video, I very casually stated I bought one share of each company, and I basically wanted to. And one of the reasons, aside from the fact again that it was a vanity thing, like, you know, these companies helped me be successful, therefore I wanted to own a piece of them. But I also, when people like said things to me like, you know, why do you complain? You have no right to complain about these companies. You don't even drive anymore, which that was always a strange argument. Like, you don't drive, therefore you cannot comment on these companies. Like, really? I don't make movies. Does that mean I have no opinion on the Disney company and how they're absolutely screwing Scarlett Johansson over right now? I have no opinion of that just because I don't make movies. No, I'm sorry. That's not how it works. But I figured this would like end one argument. Okay, I buy a share of stock from each of these companies. It's like, okay, well, now I own pieces of the company. I do. And because I own pieces of the company, I now have the right to say whatever I want about them. Well, most people did not see it that way. They saw that as I don't know what to think, but people felt so betrayed. I remember that was like my first mass exodus where people were just so upset that I bought that stock. I remember calling Peterson and like saying, dude, this is crazy. I just lost 200 subscribers because I bought a share of Uber stock. Now, full disclosure, I did end up selling them at a profit. At one point, it wasn't much fun to own them anymore. I was starting to invest seriously in other companies. And so I decided to sell those stocks because they were up. I did own stocks in Uber, Lyft, Grubhub. I never owned a stock in DoorDash, which DoorDash, that probably should have been the one that I would have owned, because what inspired this channel to spin off from my other channel, The Failed Journalist, was my DoorDash videos that did very well, but had no business being on a site where I routinely talked about DVDs and The Simpsons episodes. But I was never going to pay $190 for DoorDash stock, and that stock is still super, super overpriced. Like, what is that? What is that stock even at now? Let's just take a look real quick. Let's see here, $174.34. That is BS. That is so ridiculous. Let's see here. How low did it get? It got down to $112.99. DoorDash is not worth $120. It's not worth $175. DoorDash is worth $25 a share. That is absolutely ridiculous. So, that's just, but yeah, many people like me and Lisa, as you can see, we bought a share in the company, just say we owned a share in the company. But small investors aside, there was one particular company that had a ton of shares in Uber, and that was SoftBank. And SoftBank is basically a hedge fund run by a millionaire, Masayoshi Son, I believe his name is. And their whole thing is like, he's right now investing in robotics, technology. He's basically investing in the market for the day that the robots take over the world. That he said something to those effects, like, I am investing in robots because robots will run society, which, and then my question is, well, wouldn't you want to invest in buy the companies to stop that from happening? Because if the robots take over society, then the robots will take over you, because the robots don't care about money. So I don't know. I mean, okay, and I should mention, like, because it was brought up, I do have stock in Airbnb. That's really the only gig company that I have that I own serious stock in. But I do have issues with Airbnb as a company, so I will still criticize them. Even though I'm an investor, I want them to make money, because then I'll make money, but I want them to do it responsibly. So here's the thing. SoftBank, yeah. So SoftBank invested very heavily in Uber, very heavily. In fact, I hear SoftBank's investment was so huge that basically it meant Uber didn't have to go public for basically another year. That's how much money they put into Uber. They also put a lot of money into WeWork, and if you watch that Hulu documentary about WeWork, you'll see that Son basically wrote their CEO a blank check to do whatever he wants, or whatever he wanted, I should say, because he's not there anymore. And he did not use the money wisely. So, the funny thing about SoftBank is that they invest in a lot of companies that fail. They really do, which, when you look at the things that fail that still go on to be pretty big, Uber, SoftBank, Trump, how many times did he file for bankruptcy, but he still became president? You do wonder, like, maybe failure is what you should be aiming for. Maybe you should aim to fail, because it will invite you to do bigger and better things. So here's the thing. SoftBank invests in Uber, and they've held that stock for a while. They have, but here's the other thing. Remember how I said how SoftBank tends to invest in companies that lose a lot of money? Well, one of the companies that SoftBank invested heavily in was Didi. Yes, Uber's rival, Didi. Like, SoftBank was not loyal to Uber by any stretch of the imagination. SoftBank was what we would call in the dating world playing the field, which is where basically you leave your options open, you you hit on multiple girls because, hey, if one of them doesn't work out, there's another one to go to. That's what SoftBank was doing, except with technology companies. So they invested in Didi. They might have even invested something in Lyft. I don't know for sure, but I do know that they invested in Didi. And Didi went public about a month ago. And full disclosure, I do have stock in Didi as well. I mean, it got to $10 a share. How could I not put $100 into it to see what would happen? And they're in trouble. They're in serious trouble, primarily because the Chinese government has threatened to delist them from the App Store for collecting data on Chinese citizens, which of course is funny because that's what these apps do. They collect data on you. That is how they are able to basically be the anti-competitive monopolies they are. I think the issue was that the Chinese Communist Party wanted that information and basically Didi wasn't giving it to them. So, they threatened to delist them from the App Store. Then there were rumors that Didi was going to take the company public, not public, private. And so it's been a mess. Like the shares, I think, debuted at $25 or something like that. They're at like $11 or $12 now. It's not a good situation. And again, I put like $100 into them, something like that. And I know I'm probably going to lose that, but it was just too cheap not to do anything about. Like I had to try to see if something would happen. Well, the thing is, SoftBank keeps losing money in all these investments, and they can't lose forever. And they basically decided that they were going to get out of the Didi business, and they sold their shares at a loss, of course. They took a bath on it, but because they are selling their shares, oh wait, I take it back. I made a huge mistake in this. They actually decided that they were going to sell Uber shares because after, I guess, a year or two, maybe 3 or 4 of investing in Uber and basically not seeing any real return on investment, well, unless they sold like 5 months ago, but I guess they didn't do that. They basically decided to sell Uber to cover Didi and other losses. Now let's look at this article because I'm a little uncertain whether or not they also sold Didi. I thought they did, but we'll see. So, according to CNBC, SoftBank is selling about 1/3 of its stake in ride-hailing company Uber, in part to cover losses on its investment in Chinese ride-hailing company Didi. To people familiar with the matter told CNBC. It's planned to sell 45 million shares, which will have a 30-day lockup. Uber shares fell 5% in extended trading following the report. The value of Uber's own Didi stake declined $2 billion last week, so a lot of people are losing money on Didi right now, following the June debut of Didi's American depository shares on the New York Stock Exchange, as China reportedly planned fines and other punishments against the company amidst a broader crackdown on U.S.-listed Chinese companies. Another thing I have to keep in mind about what's going on is China is now cracking down on Chinese companies that are on the U.S. stock market. Because here's the thing, it's totally unfair, by the way, that China can list their stocks on America's stock exchange, but we can't do it on theirs. That's not fair, but that's not what China's concerned about. No. What they wanted to do is we're kind of, not to get too political, but we're basically in a Cold War with China. Basically, China is using the 100th anniversary, the 100th birthday of the Chinese Communist Party to flex their muscles and make some bold proclamations about invading certain countries and destroying armies and things like that. Things that have not gone over very well with us or other nations at all. But they're still doing it because, they've got a birthday to celebrate and they want to make themselves look like the big guys. So all the Chinese companies that are going IPO in America are going to be investigated by the Chinese Communist Party, basically to artificially drive the stock down because they want to hurt American investors. That's really what this was about. But anyway, SoftBank has lost about $4 billion on its Didi position in total, CNBC's Deirdre Bosa reported. It's also suffered from a decline in valuation of Alibaba, the botched Ant Group IPO, and paused plans for a ByteDance listing, which owns TikTok. In addition, SoftBank's Masayoshi Son, that's the guy's name, has increasingly been playing in public markets with its SB North Star unit. The news comes 1 week after Uber stock rose slightly after the company's trucking unit announced plans to acquire shipping software company Transplace from TPG Capital for about $2.5 billion. That's a story I missed. It seems like Uber buys a lot of companies and then just runs them into the ground. Let's see here. DiDi shares have fallen 37% from their 14.14 closing price on the stock's first day of trading, June 30th. Over the same period, Uber shares are down about 8%. SoftBank's own shares have also tumbled since the DiDi U.S. initial public offering. The SoftBank Vision Fund owned 21.5% of DiDi following its U.S. listing. And that's why SoftBank is losing that much money on DiDi. Because again, if the stock is at $20 or more when it premieres, but it gets down to, I think it even got, how low did it get? Let's look real quick to see what this, how low this got. They haven't been around for, well, they've been around for a while, but they have not been on the stock market for a while. Well, today they're at $9.55. They got as low as $7.49. You own 21% of that. And by the way, okay, it didn't start at $20. It started at $16, but still, this is not heading in the right direction, as they say. But, well, I do have, again, a stake in DiDi. It was too cheap. I had to try. We'll see if I get screwed on this one. I probably will. Once in a while, you just have to take that risk. So, that's just life. But imagine being DiDi. SoftBank. And no, I don't live with my parents. Guys, I've been in this house how many years? You've never seen my parents in my video. Come on. But anyway, trolls. Anyway, I heard DiDi might consider, no, they're not going private. They did not. They have denounced that. But let's get back over to this article. So you can understand why SoftBank, though, would want to maybe get rid of their holdings in this company. That is a huge, huge drop for someone who has 21.5% of the company. So, but in the way, here's the thing. They don't say that they are selling their DiDi shares. They are selling their Uber shares. And look, if the Uber shares were about $50 a share when this news hit, and SoftBank got them for less than the $40, the Uber shares have probably brought in some money. So they're kind of like, well, look, we're in the black on this one. Let's cut our losses. Rideshare's not recovering anytime soon. Apparently they invested, let's see here, $333 million in Uber. And as recently as March 31st, Uber referred to SoftBank as their large stock holder. Now, they also does not say that they will be getting rid of all of their shares in Uber. In fact, they probably are only going to be getting rid of a fraction because, again, they just want to cover some losses. They still believe that this is going to be the future because why wouldn't they? And if you really need to understand that Uber's heading in the wrong direction, let us look at their stock, which I have none in. A year ago, they were at $30.24. Now today they're at $43.70, which is $13.05 above. But again, look at that. I mean, it got fairly high, but it's heading in the wrong direction. Again, you do this 5-year thing. It did get above the $45 opening price, but it's under the IPO price again. And yeah, Uber's just overall not doing very well. But, so that is what is going on with SoftBank and Uber. I don't think they're completely liquidating their portfolio or their holdings in Uber, but they are parring down on it because DD, they're just taking a bath on. Anyone who's invested in DD is taking a bath in that company. But, like I said, that is how it rolls. I do believe, for the record, that Robinhood's probably a better investment than DD. But again, this is not financial advice. This is just a podcast. But anyway, I would like to know what all of you think about this. Comment below. Like, favorite, share, subscribe. And as always, flame responsibly. Have a good one. And with that, we will spend the next few minutes, although I don't think there are any questions that I might be able to answer. Let's see here. Let's see here. I don't really see any questions except for that you still live with your parents, which is like, no, that's a hard no. Haven't lived with my parents in 10 years, maybe more at this point. So I live with my wife, the person who does things to me at night, and good things to me at night. So I think a lot of the people who leave snarky comments like that probably can't say the same thing. But anyway, I think that is where we are going to end this particular, Tom, I need to ask you something, because you've said this before. Why do you think Robinhood is a scam? Like, can you actually articulate that? Because I don't know what you mean when you say Robinhood's a scam. I mean, you're buying stock on the stock market. That's what it is. And Robinhood is free. They brought the free stock trading thing around. How is it a scam? Most people don't even pay for it. I mean, if you buy stock from Robinhood and you lose money, or if you buy crypto from Robinhood and you lose money, that's because the markets aren't doing well, not because of Robinhood. So do you want to explain why Robinhood is a scam? I mean, I was certainly not happy with them when they turned the trading off for AMC and GameStop. That was probably, a dumb thing that they did. But, can you actually articulate why they're a scam? I'm waiting. I'll wait another 30 seconds. This Clear American stuff is really good. Waiting, Tom. Waiting for you to explain why it's a scam. No? All right. You know what? Yeah, it's been 30 seconds. So you're right. He probably doesn't have a Robinhood account, and everyone else is laughing at you. So anyway, but since there is really no questions here. Here it is. People who use Robinhood don't read fundamental or 10Ks, just a gambling app for the average fool. That does not make it a scam, though. It is a legitimate tool that people can use poorly. Let me explain. Let's put it this way. In fact, I've got one right here. Let's look at this. What is this little thing by Apple? Oh, it's a credit card. It's a credit card, not the Apple credit card. Apple credit card. I've got several other credit cards, but this one happens to be nearby. And I also have no issue showing it because it has no number on it. Credit cards are great financial tools. Great financial tools. When you're in a pinch, like for an emergency, they're great. When you are using them for your business, like I do, they are really great. But if you're a compulsive shopper who overspends what they make and does not have plans to pay back, or does a very poor job paying back, credit cards are not so good. In fact, credit cards can be quite dangerous. My wife, unfortunately, fell into some bad problems with credit cards. Doesn't mean she's a bad person, and it doesn't mean that credit cards are a scam. The finances got ahead of her, and she had to do something that she really would have rather not done. And as Low Roller Scratcher is pointing out, all brokerage accounts could be gambling tools like investing stock. It's not just Robinhood. Robinhood is a tool, and it just depends whether or not you use the tool wisely. If you are legitimately know what you're doing and you know what you want to invest in, you can do that pretty safely. And if the market tanks, the market tanks. I mean, that's not Robinhood's fault. But kind of in the same way how going to Vegas to gamble is either a fun weekend out for some people or a money pit that will sink you into a situation which you will never dig yourself out of unless you file for bankruptcy, which for the record is not what my wife did. I just want to make that clear, just because the two stories were close together, but they're not related. Robinhood is a tool like, hey, if you're serious about investing and you have a fairly good idea what you're doing, then Robinhood is a good tool. And if you don't know what you're doing and you're just putting money in for fun and you find yourself $10,000 poorer the next year, that's not Robinhood's fault. That's probably your fault for not actually making sure you were doing what you were doing. Like you should have known. You should have like looked up to see what you were doing. But anyway, that is my opinion of it. So, and that's actually a good place to end this one because, because the thing is like, yeah, we've just talked about these stocks. And, if you spend $10,000 on Robinhood stock yesterday, yeah, you're probably not feeling pretty good. You basically lost $2,000 since yesterday. So, that's, well, maybe not $2,000, but you lost something. I mean, but you know what I'm saying? So, I like a better example is if you bought 10,000 shares of Robinhood, then yeah, you're down $2,000. But, just be careful, folks. Read what this is all about. Get financial advice if you can. Maybe talk to a buddy who might know how to do these things, and never spend more than what you're willing to lose. But anyway, folks, that is really where we're going to end today's episode. So thank you so much for spending this time with me. And I hope to do it again soon. And you know the drill. You can comment below. You can like, favorite, share, subscribe, and come back Monday for another video courtesy of me. Thank you, and flame responsibly.